Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 31st of March. Oil prices slid on Wednesday after the weekly U.S. Energy Information Administration report revived supply glut concerns. While the report showed a smaller than expected rise in U.S. stockpiles, it marked the seventh consecutive week of rising inventories. Additionally, a considerable increase in refinery utilization is likely to have spooked investors that even more oil may float into the markets. However, we would stay mindful on further declines as major OPEC and non-OPEC producers are scheduled to meet in Doha on the 17th of April in order to discuss a potential output freeze. Iran is scheduled to attend the meeting, but stated that it will not join any output freeze as the nation seeks to recover its pre-sanctions market share. We do not expect any freeze deal to come out of this meeting, with a key producer already having signaled reluctance to commit. Nevertheless, the willingness of the other producers to stabilize the supply side of the market is one of the reasons we prefer to stand pat. Further signs of a possible deal in the foreseeable future may change investors' sentiment, and thereby oil prices may recover a large portion, if not all, of the recent retreat. As for today, during the European day, Eurozone's preliminary CPI rate for March is expected to rise slightly but to remain in the negative territory. The headline CPI rate is expected to rise to minus 0.1% year over year from minus 0.2%, while the core rate is forecast to increase to 0.9% from 0.8%. Given that the German preliminary CPI rate for the same month beat expectations of another negative reading and rose instead, we see a high likelihood for a positive surprise in the block's headline print as well. This could cause the euro to add to this week's gains. Furthermore, we believe that a rise in both headline and core inflation combined with the latest salvo of measures introduced by the ECB is likely to keep officials' fingers off the easing trigger, at least in the coming months. In Germany, the retail sales for February fell unexpectedly, though there was no major reaction from the common currency at the release. We also get the unemployment rate for March, which is expected to remain unchanged. In the UK, the final GDP for the fourth quarter is expected to confirm the second estimate and show that the British economy grew by 0.5% quarter over quarter. Bearing in mind that the global financial turbulence at the start of the first quarter, this data is likely to be seen as outdated, and hence the reaction in the pound may remain limited at the release. Norway's retail sales are expected to have stagnated in February, following a rise in the previous month. From the US, we get the Chicago PMI for March, and expectations are for the index to increase to 50 from 47.6 previously. This indicator is highly correlated with the ISM manufacturing index, due to be released on Friday. Following improvements in the Empire State and Philadelphia indices, a rise in the Chicago PMI could increase speculation that the ISM print will enter the expansionary territory as well. This could support the dollar a bit, at least at the release. Initial jobless claims for the week ended on the 25th of March are expected to have remained unchanged, while the 4-week moving average is expected to tick up a bit. In Canada, January's GDP is expected to have accelerated, but only slightly. As for the speakers, we have Bank of England Governor Mark Carney and Chicago Fed President Charles Evans scheduled on Thursday's agenda. Governor Carney's speech is likely to attract some special attention, as in the latest Bank of England Financial Policy Committee statement, officials noted that prolonged Brexit uncertainty could further weaken sterling. Therefore, we will look through his comments for any further remarks on stability risks should the nation choose to leave the EU, something that could cause violent swings in the pound. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.